U.S. crude oil stockpiles on the rise, increasing by 8.7 million barrels in the week ended January 31st, according to the Energy Information Administration. Oil prices sliding today as traders watch those inventories, plus the news flow on tariffs and the Mideast, now Russia. CIBC Private Wealth senior energy trader Rebecca Babin joining us now to discuss a lot of geopolitical headlines that people are now watching, Rebecca. I actually want to start with the last first, because the Russia situation, I know it's something you're watching carefully. There is some reporting that the Trump administration is expected to come out with some sort of proposal for some sort of plan for Russia and Ukraine next week. What are the dynamics in terms of Russia in the markets right now, and how that could maybe help or change those dynamics?
So that's a great question. Right now, Russia has been kind of under an increased sanctions pressure since late December. The last thing the Biden administration did when they left was to expand their sanctions profile against Russia, and it included many more tankers, a lot more insurance companies, and the market has really pulled back on being very afraid that we were going to lose supplies. Keep in mind, there have been sanctions on Russia since 2022 under the price cap, but the flows were still moving, right? They were able to work around it. It wasn't heavily enforced, but this last round really caught people by surprise. And most importantly, what happened was the buyers of Russian crude, India and China, knowing Trump was coming in after this announcement, stepped back and said, you know what? We're not going to offload those barrels until we understand what's happening. This tightened the market, and it also drew in a lot of money. So the market went from being very neutrally positioned at kind of in early December to very long at the end of December and into January. So that dynamic is what really pushed the supply risk. Up until then, we hadn't seen much impact of sanctions on Russian flows, right? They're kind of working on their shadow fleet, trading around the price cap. The barrels are still there. This was really the first time people were concerned about the barrels moving off. A potential peace plan or steps towards a peace plan obviously kind of takes away that potential supply risk. Not that it's going to go away, but maybe they get an extended timeline of when it comes on. Maybe there are waivers, right? So if you were in the market because you're like, okay, we're going to lose 500,000 barrels of Russian crude, you look at that headline, you say, I don't know if I want to price that in. And guess what? I also have to think about what's going to happen with tariffs on China and if that's going to hurt demand, and my conviction is lower. And we saw $17 billion come out of oil and fuels over the week ended January 31st. This had a major impact on positioning. And then we've broken some technical levels, and that drives the CTA and systematic flows to kind of abandon their long positioning. So it's been a week.
Wow.
Can I ask you about also Iran there as well, Rebecca? Because Trump, on the one hand, he talks about maximum pressure. On the other hand, he's put out some posts on media seem to kind of want to downplay the tension. How are you thinking through that dynamic in your market?
Well, that's a really tricky one. So I think two things. First, maximum pressure isn't a new idea. That was kind of a little bit priced in throughout the campaign and on the whole notion that Trump might win the election, right? He used maximum pressure in his first term. So as soon as he won, there was a pricing in, like, Iran is currently exporting 1.2 under maximum pressure. I got to at least price in, we're taking 500,000 barrels off, right? That's going to be his day one. The fact that he's walking it back a little bit, there's a lot of skepticism on whether they can actually reach anything, but the idea that diplomacy is really on the table, again, takes away that maybe it's not 500,000 barrels we lose, maybe we lose 300,000, maybe it's a longer timeline, right? So if I'm playing the market on supply risk being the driver of upside, I've lost a lot of that conviction this week. And if there's a lot of concern about the demand side, the buyers who would normally come in and buy that dip on fundamentals, supply and demand, might not be as convicted because we're worried about tariffs.